Alright guys, trading is very risky, particularly when you leverage a whole bunch to one and sometimes more. Morning Dave. Do not trade your hard-earned money until you have some kind of track record of success using your broker's demo. Don't trade money you cannot afford to lose. Alright folks, so like always, been apocalyptically flu-ridden of late. Yeah, I think that we on our way to that. Those of you that attended my session yesterday, we had a trade plan on the pound to short 52.40, and with a 51.50 target. We've obviously eclipsed that. I think over the next, looking at the 4 hour, the next little bit, next sort of 12 hours, we're probably on our way to that second target of 50.50. How you guys doing today? So, sorry, I was just responding to a private message. Okay, guys, so a couple of small announcements. Today, I'm going to talk about just some trading lessons learned over the last few days and over the last few years, and like all things, always enjoy the participation. So the more sort of discussion we have, the more we learn, the more interactive this is, the better the webinar. And then two is I am leaving FX Bootcamp, so I'm assuming FX Street still wants me to come hang out with you guys, but this will be the last time I'm hosting a webinar representing FX Bootcamp, so that's what's up. Okay. Alright guys, so let's get on with things. Yeah, I'll just be trading for myself basically. You know, there's no hard feelings, there's no nothing. It's just I've been teaching for a very long time, and I just think it's time that, you know, I think it's time that I switch it up a little bit. So that's what's up. Yeah, so I was going to do a little newsletter and whatever else, but so anyway, that was my announcement. So let's get on with our webinar. So in class yesterday, kind of, we talked about, you know, what would be some general lessons learned, and to be fair, we all came up with some, you know, some very commonsensical ideas, but I thought it was worthwhile mentioning a few of them. We'll kind of discuss them as we go, and I haven't arranged these in any particular order. Sound should be okay. You guys hear me, Lima Charlie? Okay, cool. So I'll throw it out to you to begin with before I kind of throw my take on this, but if you could put one important lesson for yourself that is probably above all the most important thing that you've learned, you know, I don't care if you've been trading 2 days, 2 years, or 2 decades, what do you think for yourself, because this is going to be different for every person, but what do you think for yourself is probably the most identifiable, the most important lesson for yourself? Right, so price chasing is a particularly obvious one, sort of that fear of missing out driving you. Managing risk, believe in yourself, yeah, that's a goodie. Trade the plan, yep. There's no bad ones here. Right, there's no wrong answer to this. Have a bias, I like that one. I'll tell you mine. Mine is just be kind to yourself. All right, you know, it's kind of not really a trading related. It's not really the mechanics of sort of trading related, but I think just not beating oneself is probably one of the biggest things for myself, because I'm my own, you know, with social media and yeah, guys, if you want to reach me, I'm getting a lot of private messages. If you want to reach me, you can reach me on my Twitter at ForexDavid. That's a great way to ping me. Or here's my personal email. There we go. Anyway, just what I was saying is, for me, one of my most important lessons is just being kind to oneself. I think it's when it comes to trading, and this is going to be a pretty discussion sort of format webinar today, but when it comes to trading, we invest so much of ourselves in it, don't we? You know, we invest our time. We invest our family's time. We invest our time with the family. We invest money, lots of it. All right? And more importantly, we kind of invest our own belief in ourselves, isn't it? I don't know about you, but trading to me has been about the hardest thing I've ever done. Right? And I don't have kids, so I can't say that parenting is that, but I've done a few things in my life, and there's just no question in my mind that trading is the hardest thing I've ever attempted. And so the point is that it's very easy, given all this investment, whether it's financial, whether it's time, whether it's just investment of ourselves, it's very easy to get down on oneself, be self-critical, be sort of denigrating to it's a very slippery slope, isn't it? So the biggest lesson for me is that failure is part of the process with this. There is some failure. There's lots of it. And not taking that personally is very important to just self-preservation. Can you guys, is the sound? Yeah, okay, thank you. So it's not on my side. Alright, so lesson 1, just be kind to yourself. Alright, nothing profound there, but it's a nice mindset to have. It's like, you know, I always try to relate the Forex business to a retail business. You know, let's say that you are selling shoes in your corner store at the mall. And you took on a certain brand of shoe and displayed it in your window. Now let's say that shoe type wasn't particularly well received. Wasn't particularly well received with the public. You wouldn't take it personally. You would probably just say, hey, it's probably wasn't a good call to do that. But for some reason in trading, failures become personal, or at least they did for me. So one of the big things I had was be kind to yourself, and only be accountable to yourself. I've got my mic turned up to max, so me see. Is that better on the mic volume? Okay. I just turned it up to concert levels. Alright, thanks. Yeah, we're at Bon Jovi levels right now. Okay, so now let's get on to some of the other ones. Alright, one of the ones that I like a lot is bias. Okay? And most importantly, have a bias until your bias is broken. Alright, so what this does is, what I like to do day in and day out is try to get rid of one side of the equation. Sorry, I got sneezing attack here. So what I mean by that is, for us on the pound and the euro today, we were bears. Alright? And really it would have taken a significant break of 52.50 on the pound for us to be bullish. Alright? But by adopting a bias in a certain direction, it takes care of a lot of doubt in your trading. So if you say to yourself, right, the chart looks bearish, I'm going to look for reasons to short, it kind of sets your mind to a purpose, okay? And instead of saying to yourself, well, I'm going to try the long because I think it might go long, and then I'm going to try the short because I think it might go short. How about just saying, this looks down, I'm going to look for reasons to sell. It doesn't matter if now your bias needs to be a strict bias until you're wrong. So in other words, have a level in mind. So when we do our trade plans, we'll have an entry, right? We'll have an exit. We'll have a take profit. We'll have a stop loss initially. But then we'll also have a when you're wrong point. In other words, if price breaks such and such, chances are we're not heading down for the day. Okay? And then that doesn't mean to say that we can necessarily even catch up to the long side. But what it does is it just stops us looking for shorts. You know, how many times have you, and, you know, I mean, you don't have to answer, it's a rhetorical question, but spent your day trying to get short and price has done nothing but rise? You know, so it's you know, price has done nothing but rise, and then you're sitting there trying to get short all day. So it's important that, you know, having a bias, I think, is about the most important thing that you can do for yourself, but also have a level where you know you're wrong. Okay? So, having a bias, lesson number 2, paramountly important in my opinion for some good relaxed trading. Alright, we've also talked about, in previous webinars, we've also talked about levels of expectation. Alright? And levels of expectation are derived levels of expectation can be derived from a bunch of things. One, over expectation that we put on ourselves, but 2, reading social things and reading stuff, I find can be because whenever I go to, I don't go to many, but whenever I go to Forex conferences, I've yet to run into a person that's ever struggled. Everybody makes money, which is surprising to me because I lost a ton of money to begin with. So nobody's ever lost money, which is surprising to me. But hey, maybe they're just better at this than I was. But my point being is that whatever I read is success stories. You know, I very seldom log on to a blog and excuse me, and see, oh man, I've lost 280 pips this month and have done for the last 6 months. Right? Do you know what I mean? So it's kind of funny. It's kind of, and I know for myself is that I lost that many pips at least. May not have been wrong, it's just I was stubborn. But that's another story, right? So I guess what I'm trying to say is maintain an element of skepticism when it comes to results, and then don't translate that to your own expectations. You're only accountable to yourself. You're only accountable to your own success. You're only accountable to your own analysis. So be okay with that. You know, and I'm here to tell you that 15 pips a day, 20 pips a day is a great level of expectation to have. It's a nice, conservative, defeatist level of expectation to have. There you go, Chris, success. There you go. So, you know, my point being is that that lowered level of expectation allows you to miss 95% of the market and still be a success to yourself. That means that things like fear of missing out should not be driving you. And if you miss a plan, that should not vex you. And if you take a small loss, it shouldn't knock you down emotionally, or psychologically rather. Right, so by having a lowered level of expectation, you've taken the pressure off yourself. And trading quality over quantity is also going to take care of itself. All because you adopted a realistic level of expectation for yourself. Okay? So yes, we all want to make 50 to 100 to 200 pips a day. That's brilliant. And yes, you will have those days when the market is fertile, you will have lots of them. Excellent. You've got to be in a position to be successful. But day in and day out grind, 15 to 20 pips is a brilliant little level of expectation to have. Okay, it'll free your brain up. You'll see what a difference this makes psychologically to you. Okay? So, level of expectation and being accountable only to yourself. Alright? Although this is the world of social media and the world of sharing, which I highly encourage, I think that accountability is very smart. But at the end of the day, as individuals, we're the only ones responsible for our own success or failure. So, okay. Now, the other one I wanted to talk about here is there's a lot of propaganda. You're right. So, okay. Alright, the other one I wanted to talk about is this, and I'm famous for this. Well, I'm not famous, you know what I mean. This is something I tend to do to myself that I have to be aware of all the time, and I have a way of wanting things to work in a certain direction. So, when you've been trading for a long period of time, a lot of what one does is obviously analytically driven, but it's also, oh, I've watched this movie before, therefore I expect it to do X, Y, and Z. Okay? So there's an experience element that one falls back on and expects things to do what they're going to do in a certain manner. Okay? And sometimes one reads the room and they start to do different things. But because it was such a perfect situation previously, or say it was such a negative situation previously, one wants one wants to, I don't know about that one. I have known plenty of good retail traders that make full-time livings out of it. So, but yeah, there's certain things that have to happen. Anyway, what I was saying is, my point with all of this is simply trade what is in front of you. Okay? Trade what's in front of you. One of the things I love the most on FX Street is they have a forecast page, right? Where they have different experts plus like Goldman and I think it's Citibank, a bunch of really prominent sort of institutions saying where they expect things to go. And I love to look at that stuff and have the conviction to say, no, I think that's wrong. Or, yes, I agree with that. Right? And I know as a newer trader, as a new trader, I would have looked at that stuff and thought, Goldman says the euro is going to 125? Has to be. But I remember them saying, I remember when we were sitting at euro 132 back in January or late December. And, you know, they were calling for, I want to say the 140s. And I was like, no ways. And then 2 weeks later it was, euro 125. And I'm like, okay, so we've changed the target by like 2,000 pips in 2 weeks. I'm like, cool. Okay, now I'm on board. Right, so my point being though is just trade what's in front of you. Okay? In other words, don't trade necessarily for, Germany is going to leave the Eurozone and go back to the Deutsch. Do we know that? No. Is that mass? Are we speculating? Yes. But don't speculate on apocalypse, right? Like, if it happens, great. It'll happen, and there'll be plenty of opportunity to run into some trades based on the apocalyptic fallout. Okay, but the information we have at hand right now is Germany is not leaving the Eurozone. Don't worry about it. Right? If anything, Euro is going to cruise down into the mid-26s and then make a massive pop to the upside. Okay? That's kind of where what I'm getting at here is just if you remember a certain scenario and price is not trading like that certain scenario, adapt to what is in front of you. Alright? So trade what is getting spoken to you literally from your charts, from your news, and don't try to muscle something or be a tough guy relative to what you think is going to happen based on past experience. It's what you see as opposed to what you hope is going to happen because it is an easier scenario or it is a more likely scenario. Does this make sense? And a lot of times it's a little subliminal voice in the back of your head saying, this is what's going on. It often isn't that. It often is a little voice that it may be confused with doubt. Doubt and changing bias, or doubt and doing something else, are pretty closely related. Because you'll get in a trade and you'll be like, oh, it's not working. Maybe I'm wrong. And there's a very there's a very fine line between that and, oh wait, I'm getting a whole bunch of signals saying long and I'm in the short side. Okay? So that's why it's important that you have a change in bias very clearly defined for yourself. Yeah, if we have time at the end, I'll cover a little bit of analysis. Well, it's very difficult to do. I mean, you have to look at why that, it's, if you're losing every day, need to look at why that's happening, Because it's impossible to stay positive while you're getting kicked in the teeth every day. Nobody can do that. And it's pretty something very, very, very small. As far as is this FX, I'm still representing FX Bootcamp today, yes. Okay. The other thing is, and this is just a philosophical point by itself here, is, to me, I don't consider news. I do, yes. I don't consider news as fundamentals. No, James, but you can email me and I'll give you details. I don't advertise anything. So what I mean by this is, to me, news isn't necessarily going to change the fundamental landscape of something. Does this make sense? Give you my personal email just because I'm not sure how much longer I'll have the @FX Bootcamp email. Okay? So what I mean by this is the following. Is if the euro is going to go to 26.40 and then back up to 131, which is kind of what I'm anticipating, did the European manufacturing related news last night make any real impact on that? No. Not really. In other words, yes, we got nothing but a barrage of negative news, with the exception of, we got a little bit of the French and the Germans, they came in a little bit hotter by 0.1, but overall, the Spanish manufacturing was horrible. The Czech manufacturing was horrible. We got a lot of poor news overall. Okay, the pound manufacturing, horrible. Okay, but overall, why is pound coming off here? Well, it's made a double top at 52.5, which we know was like a massive, triple bottom on a weekly chart. And all of a sudden, you get a 15-minute change of trend and a bunch of 4-hour rollover at the double top and a lower high at London Open. Did the fact that the manufacturing news came out negative really impact things? It may have given us a little bit more momentum, but really things were set up and put in place way before that anyway. Okay, and in the case of the euro, are they going to drop interest rates based on poor Spanish manufacturing? No. Because that is not what their mandate is. Their mandate's inflation, and as long as they're achieving 2.5 or 2% inflation goal, which their CPI is right around 1.8, they're not going to cut interest rates. So those growth numbers can come out whatever they want. It's not going to change the fundamental picture, which is yield on these currencies. Make sense? Now for the UK, which is a growth and inflation mandate for the Bank of England, yes, poor manufacturing numbers is deflationary. That's important, but overall, Is it going to be interest rate affecting? Was today's number interest rate affecting? No. Okay, so never look at news, in my humble opinion, this is just an opinion, and say that is a fundamental change. No. It's the collective effect of these things. Okay? So, that's kind of my thinking as far as news. Alright, now. Okay, now, the reason why... Okay, so I gave the market about 50 grand I gave the market about 50 grand in my first 2 years of trading. Alright? And the reason why I did this was a couple of reasons. One, I should not have been trading live money yet. Two, I sort of learnt with the trading wheels on, namely the Euro USD, and then when I went live, this little thing called the pound yen, who was moving about 400 pips a day, caught my eyeball, and it was a little bit rich for me at the time, and I was right a lot and still lost money. Okay, and one of the big reasons why I was losing money is that I was cutting trades for loss, not based on technicals, not based on a rational exit strategy, but I was cutting trades based on a monetary pain threshold. Okay? In other words, I was only willing to tolerate, yes, fear. In a word, fear, yes. So, you know, if I was, say, shorting this pound here, for instance, you know, and I was only willing to tolerate a $200 loss, it didn't matter where the stop needed to be. The only thing that mattered to me is that I was only willing to suck up a $200 loss instead of lowering the lot size and then having a technical area for absorbing the loss. Okay, so yes, you can have your $200 loss threshold, right, per percentage of your account, but you need to manipulate the lot size so that you can accommodate a technical area for exit. In other words, when the trade is broken, one exits. And that needs to be traded, you need to be able to trade small enough that one is able to do that. So in other words, the decision to exit is based on sound, technical, smart reasoning, as opposed to, OMG, it's working against me again, I'm going to jump out. Because how many of you have experienced this? It works, it starts to work. Okay, you hit the button, you go up like 6 or 7 pips almost immediately. It comes back on you minus 13, minus 14, minus 17, and all of a sudden, the voice in your head goes, I'm wrong again. I suck as a trader. Down another $170. I'm really not very good at this. Not even the dog likes me. Look at him sleeping there. He doesn't even like me. Right? I'm a failure. Okay? All of these things start to enter one's mind. And then it goes against you minus 21 and you're like, oh, cut it. Cut it. I'm out. And then it starts to go for you. And then, oh my goodness, now it's working for me. So now you think, do I jump in here again? So now, in a reactive fashion, you jump in there, and inevitably you've jumped in exactly at sort of what is potentially a higher low. And you're actually wrong in that one, and it smacks you in the face harder this time. So now you've taken 2 losses on one trade. But then the next time you don't jump in, it just falls through the floor. You're not trading smart at this point. At all. You're not doing anything professionally at all. It's totally away. It's just totally like if somebody was sitting in your office watching you, they would just be there. They'd be speechless. They would just be there shaking their head in sort of dismay and disgust. Right? Yes. Oh, come on, dude. Serious? Really? And you know, there's 61 of us here. You and I both know. You and I both know that we've all done this. You, me, everybody here. Okay? So my point being is that you're better off trading your plan as it's designed. Right. And it's happened, yeah, to say it's happened once would be a lot. I did this for 18 months straight. Yeah, one time. And eventually you've got to say, look, enough is enough. I'm either going to go down building Rolls Royces, you know, that's basically what Rolls Royce said. They were like, oh, we're going to go bankrupt. We might as well build the best cars possible. Okay, so my point being is, look, if you're going to lose money, you might as well lose money doing it right. And you'll be surprised exactly. So define that risk. In other words, this 42 pip risk is 0.5% of my account. Am I willing to invest that amount of money on this trade? Yes or no? Decision is yes, done. Gets to entry point, confirmation, done. Traded. Now, do you let it run to your stop? You may or may not. You may exit on a discretionary basis. But if you are in your first 2-3 years of trading, don't even mess with that. If you've been at it a while, you kind of can read the room a little bit, you know. If the LZ is hot and you need to, you know, landing zone is hot, you need to get the heck out of Dodge, that's a different thing. But define the risk, commit to the trade, set a technical level of exit for loss or profit, and run with that. You know? And because I've talked about this many times to the point of redundancy, but you will never know unless you treat your plans with a level of consistency. You're always going to have, when I say an inconsistent set of results, you want a consistent, inconsistent set of results. You don't want an inconsistently inconsistent set of results. Does this make sense? So in other words, you don't know whether you're going to take 3 winners in a row and then 4 losses, or you're going to go win, loss, win, loss, win, loss, win, loss. The order in which those wins and losses present themselves is often inconsistent in the way that it presents itself. However, the way that you take those trades needs to be consistent so that you can generate a consistent, inconsistent set of results as opposed to an inconsistent set of results. Because if you're approaching it inconsistently, you never know what's working for you and what's not. So what do you improve on? What do you change? No idea. You know? It's like a bodybuilder saying, oh, I've got to work on my I got to work on my shoulders for the next contest. And they just go and bang out a bunch of shoulders, and all of a sudden their bodies change. They look like, they look horrible. They know that they probably shouldn't have done so many shoulders, but they know that that is where the change occurred. They know definitively that that's the problem. This is half the issue with trading, is that a lot of times it's very difficult to work out what you're doing well and what you're doing poorly. Right? Yeah, is there foul play in the market? I guess so. Can you control it? No. So I guess I've never, and I'm not saying this to be negative, alright, but I don't think I've ever traded and thought the brokers screwed me. Actually, I've had a few times where I've been like, wow, that's a little dodge, but I've never really entered the market and thought, wow, the Bank of Japan, what a bunch of... And I've never traded anything going, wow, FXCM, really? I guess I've just always accepted it as, that is the playing field, let's play. You want to play dirty? Okay. Got you. Anyway, so that's kind of where I'm at. And then, as far as the other basic lessons, I still don't think that there's anything better, technically speaking, than just good old-fashioned support and resistance. Right? If you're gonna keep your analysis to the bare bones, to the absolute, if you're going to keep your analysis just to nothing else other than support resistance, here you go. Red zone. Right? Swing low, swing low, swing low. And I'm doing this in retrospect, obviously. And all of a sudden you log in and you see this. And you go, great. 15-minute change of direction. Previous swing highs, area of selling. Great. How about I try and short there based on the daily resistance, the lower low with respect to this, and the previous swing highs. Forget the fibs, forget moving averages, nothing more than support and resistance. How about I give that a crack, see how that goes. So, point being is there's no replacement in my book. There's no replacement in my book for support and resistance and confidence to trust that is, yes, this is a categorically important area for this currency. Let me now watch price action around it. And you can do that just by horizontal support and resistance. It's the same as Tim Mickle sent me something on Twitter, and he's looking at this. And he's saying, right, I'm going to short that. He's absolutely right. What do you think is going to happen? What do you think is going to happen right here on the pound? At 51.37, 51.40. It's going to be the first level it's shorted. It's also daily S2, so chances are price is going to head up there, come off that, make a lower low, then head more towards this resistance area, right? And then try to make a lower low. How is that, how is that designed? Well, it's designed on price action in terms of your 4-hour, daily resistance, and then previous resistance or previous support now become resistance. Trade plan. Now what happens if it doesn't do this? If it doesn't get there? Okay, well, the pennies weren't, the money wasn't left under the carpet, so I'm not going to trade it. Fancy that. Next plan. Okay, so, you just as far as your trading strategy, I don't care if you use Elliott Wave, I don't care if you're a fib guy, I don't care if you're a harmonics person, a moving average. I mean, these are things, this basic, raw support and resistance, can't beat it, not with a big stick. Okay? And, obviously there's many other, I had a whole bunch of other stuff written down, and we've kind of run to the end of our time here, but did Dave wave? Thank you. Thanks, Dave. Happy baseball season, by the way. Anyway, guys, so I hope that you enjoyed this presentation. If you want to get hold of me, at ForexDavid is a great way to do that on the twit. Okay, and I hope to see you. I think I have another one scheduled towards the end of the month, but I hope to see you soon. And good luck further, everybody.